Everyone, welcome back. I have some more updates today, so let's jump right into it. The first piece I have here is from CoinDesk, and it states Coinbase lays off around 1,100 employees. The exchange is reducing its workforce by roughly 18%. CEO Brian Armstrong admits the company grew too quickly. Coinbase Global is laying off around 1,100 employees as part of a cost-cutting plan, the company said in a filing on Tuesday. Coinbase initially said in May it was paring back its hiring plans and then later said it would rescind new job offers. The latest plan involves cutting the workforce around 18% as of June 10th, after which it will have around 5,000 total employees as of the end of the quarter. I don't think as of the end of the current quarter. Okay. The company said, adding that it expects the plan to be executed by the end of the second quarter. Coinbase estimated it would incur $40 million to $45 million in total restructuring expenses. On Tuesday morning, Coinbase CEO Brian Armstrong published a note that was shared with all employees. The quote says, "We appear to be entering a recession after a 10-plus year economic boom," end quote. That's what Armstrong stated before alluding to the potential of another crypto winter. The note concedes that the company grew too quickly in the cryptocurrency bull market, scaling from 1,200 employees, that's 1,258 to be exact, employees at the start of 2021. Outgoing Coinbase employees received the news in their personal email addresses after access was cut from Coinbase systems, according to the note. Coinbase shares are down almost 80% this year as the sharp decline in crypto prices has hurt the exchange transaction volumes. On Tuesday morning, shares of Coinbase rose about 1% in pre-market trading after the layoff news was announced. However, in regular trading, shares were down about 3% to $50.40. In response to the announcement, Mizuho lowered its 2022 revenue estimates for Coinbase and reduced its price target from $60 to $45. It said it was concerned cutting workers could hurt efforts to find new revenue streams, potentially leading to a pricing war with rivals as competition rises. Coinbase is the latest in a slew of crypto companies to announce job cuts. On Monday, lending platform BlockFi reduced its headcount by 20%, while crypto exchange Crypto.com slashed over 400 jobs. Prior to that, the Winklevoss-led exchange and custodian Gemini announced it was cutting 10% of its workforce, and Middle Eastern exchange Rain said it was cutting dozens of jobs. So, this is making a lot of headlines, and it's because of a couple of things. One, Coinbase did grow exponentially as the crypto became more and more of a household name, and it was and is still one of the easiest platforms to buy, sell, and trade crypto, and that's what makes this so interesting. Because they are a wildly successful company and had a really high, an astronomically high valuation before they had an IPO and hit the New York Stock Exchange. And this generated even more hype and excitement around the prospects of Coinbase. And as of recent, obviously, as this article stated, they have started to see a lot of, revenue dry up. And so with interest rates increasing, it's becoming more and more expensive for these businesses to operate as a business. So we've been seeing some of these signals of a recession. And this is what is worrying people, because if these high-powered tech companies are not immune to layoffs, then what about the much smaller businesses? So, again, Coinbase, they already cut people several weeks back, or maybe even last month. And here they are firing people once again. So this is obviously very unfortunate, and I empathize with those who were affected. I am unsure how many of those people were engineers, but I did see a story that actually ended up going viral about an incoming software engineer who received an offer letter from Coinbase after she had graduated from college. She accepted the offer, and the day before her first day of work, was told that her offer has been rescinded, or basically that they had to let her go. So we are living in crazy times, and it will be very interesting to see how things continue to play out. But anyway, moving on here. Next piece is from The Verge, and it states Chevy is auctioning off a Corvette NFT, and the winning bidder gets the car too. It says Chevrolet is the latest automaker to jump on the non-fungible token bandwagon, but it's taking a slightly different approach. Chevy announced plans to auction off a Corvette-themed NFT, but the winner bidder won't just get recorded on the blockchain. They'll also get the actual sports car inspired by the artwork. The NFT, which depicts a lime green Corvette Z06 blasting through a cyberpunk landscape, was created by artist Nick Sulo, who goes by Xsulo online. The upcoming auction pairs Sulo's NFT with a custom-painted 2023 Corvette Z06 color matched to the art. In case you need a refresher, the new Z06 is Chevy's shot across the bow for all other supercar manufacturers out there with Italian names. It's the first Vet to feature a naturally aspirated 5.5-liter V8 mid-engine located directly behind the driver, and it's a more hardcore, tact-focused sports car than its predecessors. The Z06 is expected to go into production summer of 2022 and will be on sale as a 2023 model. The winning bidder will not only get Xsulo's NFT, but also the minted green Corvette, which will be the only car painted in that color. Wow, okay, so there's a scarcity component there. Chevy vows to not apply the minted green color to any other production Z06. Not only that, but the car will carry the option code RFN, which will forever associate the car with the NFT auction. And the Corvette's VIN number will be in binary, because NFTs are digital and computers use binary, and you get it. Yeah, that's pretty sick. So I thought this was pretty cool. This is just another example of further adoption, further reach. I think things like this can be very useful moving forward into the future when they start to map NFTs to authenticity. It would also be cool to see if, all the other creative things that they will do with NFTs in the automotive industry. But yeah, just wanted to highlight this really quick because I've never seen anything like this just quite yet. But yeah, NFTs are integrating into every single sector slowly but surely. Next up, last but not least, a piece from the New York Times. It states the Fed may discuss the biggest interest rate increase since 1994. It says here the Federal Reserve is likely to discuss making its biggest interest rate increase since 1994 at its meeting this week, as a range of new data suggests that inflation is coming in hotter and proving more stubborn than policymakers had hoped. Central bankers have been promising to be nimble as they fight inflation, a stance that will probably prompt them to at least discuss whether to raise interest rates by 0.75 of a percentage point on Wednesday, when officials are set to release both their decision and a fresh set of economic projections. The Fed raised rates by 0.5 percentage point in May, and officials had suggested for weeks that a similar increase would be warranted at their meetings in June and July if data evolved as expected. But costs have not behaved as anticipated. Instead, a report last week showed that inflation re-accelerated in May and is running at the fastest pace since 1981. Two separate measures of inflation expectations, one out last week and another released Monday, showed that consumers were beginning to anticipate notably faster price increases. That is sure to increase the sense of unease at the Fed, which is trying to squash high inflation before it changes behavior and becomes a more permanent feature of the economic backdrop. Jerome Powell, the Fed chair, and other officials have repeatedly stressed the need to bring prices back down to a stable level to ensure a healthy economy. The string of worrying news has caused economists and investors alike to bet that the central bank will begin to raise interest rate at a more rapid clip to signal that it recognizes the problem and is fighting inflation a priority. Pretty meaty article here, but this is what everyone has been waiting for as of late. The Fed was scheduled to meet today, and I think they had the meeting. Not sure. I have not seen any updates on it, but I imagine the news will start pouring out throughout the week on the actual decision. But it is speculated that interest rates will increase, which will make it obviously more expensive to borrow. And I have been following and paying attention to some of the prominent economists out there, people like Peter Schiff and a few others. And although I disagree with him on his thoughts around Bitcoin, I think he is spot on about the Federal Reserve and the overall economic climate. We may be at the point where rate increases does not help significantly anymore, and things are going to get very interesting moving forward because I can tell that most people believe that solely hiking the rates will fix our inflation problem, but that most likely will not do it. The government is spending an enormous amount of money, and the current economic climate we are in today is, it was long overdue. Just think about a couple years ago, how many stimulus checks were getting sent out, how many PPP loans were getting sent out. Think about the moratoriums and the financial aid to support the conflict overseas. All that money was most likely created out of thin air, i.e., the Fed just printed off those dollars, and now we are having to deal with the ramifications of that. So we will see what happens with the Federal Reserve. I am not, I am sure, it will be covered by the masses, and a lot of news outlets will cover this. But yeah, this inflation and slash economic problem it's a global issue. It's not just the United States that's being affected, but yeah, we will see what happens in regards to the Fed. So that's all I have for today. I hope everyone has a great day and or night. Please remember to always do your own research, do your own due diligence, and invest safely. Until next time, TCE signing off.